I'm Charlotte McLeod with investingnews.com, and here today with me is John Feneck, portfolio manager and consultant at Feneck Consulting. Thank you so much for being here. Great to have you.
Hey, Charlotte. Happy New Year. Thanks for having me back.
Happy New Year. Really excited to have you here. One of my very first interviews of 2025. So, of course, we're going to get started talking on the year ahead. And as we usually do, I thought we could begin with gold. So, of course, we're coming off of a record-setting year. And I think many people are looking forward at the next 12 months, wondering if we're going to see the same type of price action. So let's jump right into it. What are you seeing for the gold price in 2025?
Yeah. So, I mean, as you know, we are very methodical about how we talk about price action in the metals like gold and silver. And so rather than to give an annual target on anything, what I've done in the past when we interview is just talk about support and resistance levels, because I think that's really important for clients, especially now that gold has broken to an all-time high, right? Now you're getting to a point on the chart that hasn't existed before. So you have to be more, I don't say cautious, but just more cognizant of that. And so gold for us is going to hold 2,300 an ounce. That is the new floor in my view. Slightly lower, maybe on a really bad day, but 2,300 seems to be the line in the sand. Much like when you and I interviewed last year, 1,900 was the line in the sand, right? And I said, hey, this is very, very good technical action. That we held that level for 5+ months and could never close below 1,900. Now we're seeing the same with 2,300. It's been weeks and weeks, 2,300 plus, right? And so that's extremely bullish for any gold stock, buying, because gold is doing great, but gold stocks are not. And so we can get to that in a minute. But just the technical setup for gold looks absolutely beautiful. If you look at a 10-year, 15-year, 20-year chart, I mean, it looks absolutely great. Now you've got the dynamic of Trump coming in office. I don't see how that's going to cause less volatility. And gold loves uncertainty and volatility. So I think we're going to have a great 2025. And if you don't believe me, look at what the big banks are saying, right? Goldman Sachs, Bank of America, Citi, they all have $3,000 gold targets for 2025, which is outstanding. So I'm not thinking that gold will have a bad year. I just think you need to watch that 2,300 level to make sure that doesn't break, maybe even 2,400. But if you remember, after the November 5th U.S. election, Charlotte, we bounced right off of 2,500 like clockwork. So I think the line in the sand really is somewhere between 2,300, 2,500, and you're going to have some upside here. I just said on another show that we had resistance at 26.29 last week, and we flipped that to support now, and now you're almost at 26.50 as we record this. So I think we're off to the races this year, and that will mean good things for people that own gold or gold stocks, which we'll get to in a second. As far as silver goes, I just recently bought more silver at 28.93 an ounce last week. I put that out to my clients. We're trading at $30 as we record this on the nose. If you remember, $30 was major resistance for 11 years, and we broke it in 2024 like butter. Very, very bullish price action in silver last year, ran all the way up to that 34 to 35 level and failed. So I would like to see silver get back through 33 and then through 35. And then who knows? I mean, you've got only a few other resistance levels that are meaningful beyond 35, and they would be 38 and then 40. And then the big one is 50, of course. So the setup looks really good in silver. To give you, would you like a couple of names in those areas, like within gold and silver?
I think that would be great. I think everybody always enjoys hearing about the companies that you have an eye on.
Okay. So with gold, USAU, US Gold, had some really outstanding news in November since we last talked. They basically got their permitting in Wyoming, which is, I think an underrated state in the US. I think I've met a lot of constituents in Wyoming. They want this mine to be built. And George B has the ability to build it, because if you look at his track record, he's built mines in places that are way more onerous than Wyoming, throughout South America, Central America, et cetera. So I believe in George and the team there, and I think they're going to get it done. They have a NASDAQ listing. They just raised $10.2 million about a month ago, so they're cashed up. They're going to have a great year. The stock's trading at $5.90 right now. it had hit 860 on very heavy volume on the news of the permitting, but then pulled back after they did the financing, which is normal, in our sector to see a pullback of 10 to 20% after an announcement like that. So I like the stock right here. We were buying a little bit more under 6 recently. First Nordic is an interesting one. FNM in Canada, FNMCF in the States. They have 3 million ounces of gold already identified. They catched up as well in November. They raised 11.5 million. And then right away, 2 weeks later in December, they put out a press release saying, hey, we're drilling. Like, really, really good to see a company get right on it. And I think, Taj, with his experience at Discovery Silver, where he led that company in a lot of the good years, is going to have success at First Nordic again. I mean, you could take a deposit like this from 3 million ounces to 5 million ounces pretty easily in a year's time if they continue to drill and hit. And so, good jurisdiction, good leadership, good share structure, cashed up, checks a lot of boxes for us. A last one in gold. I'd say Inflection Resources. Inflection Resources is AUCU in Canada, AUCUF in the States. The reason I say that is that October 3, I think it was, they put out news. That was their last news item. They put out news that really moved the stock. Like, they have a partnership with Anglo, which is a major top 10 gold play, as you know. And Anglo is paying for most of their drilling, like the majority of their drilling. So I love that they don't have to go out and do raises consistently like a lot of juniors do. And they have good leadership, and they're in a great jurisdiction in New South Wales, Australia. So, and that's gold and copper. It's not just gold, but that is something that I think could do way better than people expect. And the reason I say that is it was trending at like 11, 12 cents US for weeks. They put out that press release and the stock went right to 20 in a month. Like, really, really good price action. And now it faded because you've got tax law season and kind of like lack of news, I would attribute the decline to. But that doesn't mean you give up on a stock, right? I mean, it's like anything that moves from 11 to 20 and then now is trading at 12. As a value manager, you say, well, why wouldn't it go back there on good news, right? Like, so that's sort of what we teach our clients in terms of, being resilient and just watching for these patterns, Charlotte, because it's really important to watch for this kind of stuff. And lastly, in silver, I'll just give you one because I don't want to jabber on too long here, but Aftermath Silver, as I've talked about in your show, at much lower prices, AAG in Canada, AAGFF in the States, had really positive news since we last spent time on silver as well. They got another 5 million from Eric Sprott, and then Eric followed that up with another 10 million in October. I mean, he is over 20% of the stock now, which rarely happens with Eric. If you look at his work, he's 19.9 or 9.9, but he doesn't do a lot of 20% plus deals. And that is a really great endorsement of what Mike and Ralph have done with the company. They had very positive news in February of last year, so 11 months ago, in the manganese space, which we have put out to our followers immediately in March, saying this is really going to be a diversifier for them. And that was probably at like 15, 17 cents US. The stock's trading at 31 now, so it's doubled. But keep in mind, on the back of Eric Sprott's news, that stock went from 30 to 50 cents US real quick. So that was just last quarter, right? So again, retraced all of that gain, all of the Eric Sprott news, that drove the stock up. Now it has retraced right back to 30. And it's like, this is when you buy these kind of stocks because that news was real. It basically gives the company enough cash to like survive for months and months here.
Okay, really good. So we've got some gold and silver names to keep an eye on as we're heading into the year and an idea of where gold and silver prices could go in 2025. Just before we move on to talking about other commodities, can we take a look at the how and why gold and silver could get here? I'm thinking when it comes to gold, can we take a look at what your biggest driver for the year ahead might be?
The biggest driver for gold is, gosh, there's so many to choose from. I mean, the BRICS meeting in October was significant to me in that they're getting closer to launching a competing currency with the US dollar and the euro. So, you have to keep an eye on that. What are they going to back that currency with? Gold is going to be a part of that. So I think the BRICS countries, which include Russia, India, China, big names, are going to be buying a lot more gold, especially if they're going to launch a competing currency, right? Like that's a good source of buying. Another thing is continued like federal bank buying that we've seen, for like heavily since February of 2022 when Russia invaded, right? So like you've got a lot of buying over the last 3 years led by China and India, but I think that will continue. Central bank buying is just going to be a theme, right? And then you've got the volatility of a broad market, Charlotte, that has run up since March of 2009. Like this is good, getting long in the tooth. I don't care who you are. I know portfolio managers that, I'll get behind closed doors and they're nervous, right? They're nervous that this is like going on 16 years now, right? They know better, yet they have to keep up with the Joneses, right? And you've got to continue to buy Nvidia, Apple, Face, Meta, like all these stocks that are continuing to just go crazy because you've got to keep up with the Joneses, and that's a really dangerous game. If you look at 2008 and 2009, again, don't take my word for it. Go back and look at what portfolio managers that were the top managers then and how much they fell in a cycle down. Like it's really, people always look at upside. They don't look at downside enough. They have to look at what we call downside capture ratio, which is how does a manager perform in a terrible market? Because that's important. I think, we could see not a terrible market in 2025, but a market that definitely will give some back because we've had such a euphoric run here for the last few years.
Okay, yeah, I know it's difficult to choose just one or two top drivers for gold because everything is feeding in. And I'll bring up the Fed as well, just because we usually spend a little bit of time going over
Sure.
what's happening with the Fed. So we got our 3 rate cuts in 2024 and lots of speculation about what we will see in 2025. We've got the Fed shifting toward the labor market in terms of their concentration. So what are you expecting from the Fed in the year ahead?
I'm expecting drama because Powell, literally the day after the US election, was asked, I think, 3 times in the press conference following his initial comments, hey, is Trump going to fire you, essentially? And he was vehemently saying, it's unconstitutional and that will not happen. Okay. He doubled down in December and said basically the same thing, like Trump has no control over this. We'll see, right? Like people said this about the Supreme Court as well, a while, years ago, that Trump wouldn't be successful there, but he was in terms of getting a lot of people on board that were supporters of his way of thinking. Let's say it's not Jerome Powell. Let's just say it's other voting members of the Fed. I think that Trump will have an impact there, and that will be positive for gold and silver in that Trump's background is in real estate, right? Do you want lower rates or higher rates as a real estate mogul? Obviously, lower rates. So I don't know how we get there because as we sit here right now, Charlotte, we're looking at a 50 basis point year. Like you just pointed out, we had 3 cuts last year that totaled 100 basis points. The prognosis as of mid-December from the Fed's mouth is, hey, 2 cuts this year. I don't believe it. I think we get more than 2 cuts, and that's going to be bullish for gold, silver, real estate, and parts of real estate, I should say, because real estate has really run up like the broad market. So we're not uber bullish on real estate. I'm just saying that lower rates would obviously help a sector like that.
Yeah, I think maybe drama is the only surefire prediction that somebody could make for 2025. Definitely seems like that's what we're going to get. I have one small other question on this topic, just because it's a little bit timely. We've got the next jobs data coming up on Friday. Anything that you're
Yes.
keeping an eye on there?
Yeah, great point. Non-farm payrolls is what we call that in the US, and non-farm payrolls has been pretty disappointing, I think, now for months, quietly. It was interesting to me that that terrible read, which was under 20,000 new jobs created, came out right before the US election, right? Like that did not help Kamala Harris at all. And I think Trump is going to have a struggle with job growth, as he gets into office as well. I mean, like I don't see how we can continue at this pace of job growth in the U.S. And I think that also bodes well for commodities because Trump isn't, whether you like him or not, he is not anti-oil, anti-mining. Like he really wants to create jobs, right? And he'll do it any way he can. And I think that bodes well for commodities under his leadership. So um, I'll just leave it there. But I think that this year is going to shape up to be a really, really good year for commodities in general. And if Trump can pull off the big, what if and get Putin to come to the table, like that's going to be a game changer for a lot of these commodities that have been underwater, like nickel, platinum, palladium, etc.
Yeah, I think next time we talk, probably in a couple of months, is what we're looking at. Then we'll have a much better idea of what's going on with Trump, and that should be quite interesting. Okay, so moving on to other topics, let's talk about copper. So before we turn the camera on, you were telling me that your followers have a lot of questions about what's going on with copper. We
Yep.
had over the last couple of years these loftier predictions from some large firms about where copper is going to be going. And ultimately, that hasn't really quite planned out as they said that it would. So you tell me what's happening with copper right now.
Sure. So in 2023, we had a lot of the big institutions like the Morgans and Goldmans say, this was going to be a great year. It wasn't. They kind of, I wouldn't say doubled down last year, but they said the same thing. And to be fair, one of their predictions is the end of this year, where they were calling for 15,000 a metric ton. But we're between 8,000 and 9,000 a metric ton right now. I don't have the number in front of me, but it's a long way from 15,000, right? So if we were to see a move like that over 50% in the copper price, then yeah, copper stocks are going to respond very, very well. I just want to see it before, I'm investing a ton in some of these copper juniors in particular, because many of them need cash and are not doing well, right? And so like that's what I'm getting as questions from clients, like what do I do with these holdings? I kind of bought these stocks with the understanding that copper is going to do better, and now it isn't. And so yeah, you have to watch the copper price. I mean, last year was a very volatile year that you could have traded, where copper ran from four back to all the way to $5 and then back to four. It's trading at like 418 as we record this. So, it's one of those things that if you get to $5 plus copper, for sure. I mean, some of these stocks are going to fly. One that we have been like interested in here recently is Questcorp, which is QQQ in Canada. The reason is they have a decent sized land package, but one of the things that we also look for is good jurisdiction, as you know, which is Canada in this case. Really, really, that we're fine with that. We have a lot of Canadian holdings. And secondly, share structure. Share structure in this case is outstanding. It's 15 million shares outstanding. So, like, wow, like 15 million shares is nothing. So if a company like that raises money and then drills and hits, that's when the stock can really, really respond. We were lucky enough last year to own Guardian Metal Resources, GMTLF, and that was the same situation, right? We got into the stock early, had a really tight share structure. They were supported and continue to be supported by a billionaire and a few mutual funds. And so there's not a lot of ownership in the public, right? And then they are hitting in Nevada and putting out good press releases. And the stock went from, I think, 15 or 16 cents US up to 52 cents. So you can get exponential growth in some of these stocks if you look at the share structure as one of the components for your criteria. And Questcorp really has a tight share structure there. So we're interested in that. But most of the copper stuff that we've been buying just hasn't worked that well, like over the last year or two. And so I'm kind of in the wait and see mode to see how China kind of works out under a Trump regime, because if China struggles, copper will struggle a little bit more. But there are still some stocks, like I just mentioned, like Questcorp or even Inflection that we just talked about, that are just so cheap that it's worth taking a chance at these levels.
Yeah, I was going to ask you, when it comes to the outlook for copper, is it most tied to China? Are there other factors you're watching when it comes to figuring out how it may perform in 2025?
Great question. I mean, 95% of the people always say it's China all day long, but I think it's other factors because of the globalization that we're seeing, and the electrification needs, all include use of copper, right? So I think population growth, electrification, these are themes that will drive copper higher no matter what. And that just my point is, I don't know when that's going to be. It probably isn't going to be this quarter. So then, as an investor, you have to say to yourself, how much time do I have here, right? So if it's 1 to 2 year play, I think you make money in a lot of things copper related. But if you're looking for the next 3 to 6 months, you know, gold might be a better place to emphasize because I do believe, like the big banks, that gold goes from 2645 here to 3000 at some point this year.
Okay, okay. Really important considerations to keep in mind, of course. And so we've been through gold, silver, copper, and we also want to take a look at some of those special situations type of companies that you're following. This is always really interesting to me. So what do you have on your radar this year?
Sure. So we haven't posted our performance on fennecconsulting.com just yet, but we had a really good year in 2024. We beat GDX, which is the biggest, ETF out there, 15 billion plus by over 15% last year. So we attribute that growth and that performance to names like this that don't have analyst coverage and kind of fly under the radar, because as I just pointed out with Guardian Metal, GMTLF, like that is a 3% position for us. So when you buy a stock, we started it in the teens, but we bought heavily in the 20s. So the stock's at 38 cents now. We've made almost, I don't know, 80 to 100% on that stock position. That's going to add a lot of alpha to your overall portfolio, right? So one that we like that's similar to Guardian right now is called Demesne Resources, and that's DEME in Canada, DEMRF in the States. Demesne is probably considering a name change to better reflect the fact that they are a U.S. tungsten play as well. But they're in Idaho, another great jurisdiction. I think it's ranked like ninth globally. Nevada is ranked number one. So again, like a past producing project that has moly and tungsten, super cheap, very tight share structure. Like I think 25 million shares all told, maybe post their recent financing. So again, just if tungsten does well this year, which I think it will, there are very very few U.S. sources or North American sources that you can point to that are going to produce any tungsten down the road at all. China and Russia have a stronghold on this market. They literally produce 91% of all tungsten in 2024. So, and another reason to consider Demesne is because of Fireweed's recent success, right? If you look at Fireweed as FWEDF, they came out with news December 16th, I think it was, and basically said, we're getting $35 million in a grant from the government. Like, great news release. It's only up about 7-8% since that news, but that bodes extremely well for a Guardian Metal or a Demesne, who are literally just smaller players in that same subsector. Because I think the Department of Defense and other government agencies are going to have to give grants like they did to Fireweed to companies like this. I mean, Canada and the U.S. are so far behind in the race against China that these governments have to step up, and hopefully, now that we're seeing regime changes in both Canada and the U.S., we get some more love in this area. Another special situation would be oil and gas for me. Gas is super depressed, as you know. A lot of that has become as a result of the Russian conflict. Oil looks like poised to have a good couple of years, in my opinion. So we're looking for cheap oil and gas stocks that, again, don't have analyst coverage, fly under the radar. I think I may have mentioned this one other time on your show. It's called Angkor Resources, ANKOF in the States, ANK in Canada. Stocks trading at just over 6 cents US. It ran up to 10 cents US last year. I think it could retrace that because when you look at their October news, they put out a little graphic showing their net revenue growth in oil and gas over the last 8 months, and it's growing month over month. So not to say that trend will continue forever like that, but if you're clipping, even like 100,000 net revenue as a 6 cent stock with like no debt issues, right? I mean, it's just there's going to be a re-rating in that stock, in our opinion, right? And so like that's the kind of stuff that we look for is uh, interesting part of the world in oil and gas, but underfollowed stock. And these are the kind of things that we do at Feneck Consulting to really pick up the phone, talk to CEOs of companies like Angkor that can kind of tell us, hey, look, we didn't have a bang up year last year, but this year we're really well positioned, and here's why.
Okay, I always find the special situations very interesting, so thank you for that. And I think that takes us almost to the end, but before I let you go, usually I ask if you have any final words. This year, a little bit of a different spin. Any best advice for investors as we head into the new year?
Well, I'll say two things. One is self-serving, full disclosure, that I think people need to work with professionals like myself. And I'm saying this now because you should look at the price action in mining from Jan 1 to November 4th last year, right? You had a pretty darn good year if the year ended November 4th. Trump gets elected November 5th and things changed. It wasn't just because of Trump, it was because Trump is aligned with real estate, Bitcoin, different things that are now doing well in a Trump world, right? So it was a distraction away from our sector and into other sectors, right? It wasn't selling mining because it's bad. It's like recognizing that and having some type of coach, if you will, in the form of myself to tell you, hey, this is when you buy. This isn't when you sell. Like, I mean, this is November and December. We had huge net buying weeks. And I was a net seller in September and October leading up to the election. In fact, I mentioned that on your show. I was like, look, I don't know what's going to happen. So I want to make sure that I have some cash on hand. And we were able to deploy that cash heavily, partially in November, but heavily in December when people were asleep at the wheel. And I think a lot of those trades are going to work for us. So that's number one. Number two is work with a financial advisor. I think it's critically important that if you have a 401k, a 403b, that's where the bulk of your money is, right? Like you need to talk to a professional to say, what do you recommend in 2025? Don't tell me what we did in the past. Tell me what is going to happen going forward and how should I reposition? Because I think you really need to rejigger some things this year. This is not going to be a set it and forget it kind of year.
Okay, I think those are really good points to wrap up on. So thank you for coming on to talk about what's ahead and looking forward to the next one for sure.
Thanks a lot, Charlotte.
Of course. And once again, I'm Charlotte McLeod, Demesne.com, and this is John Feneck with Feneck Consulting. Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.